Good afternoon, chart Spartans. I wanted to give an update today on gold, silver and the GDXJ, the miners. And I think the central message here is that good things come to those who wait. And it really has been a waiting game. I thought the precious metals were going to break out several months ago, but that's typical of the precious metals. When you think they're about to go, they always deceive you. And it's only really when everybody has completely lost interest in the space that they start their next uptrend. And just for a little case study, I've got one friend who was invested in a silver miner, and completely understandably he's exited the investment because nothing's going on. But hopefully that's a bit of constructive evidence that the sentiment is so bad with precious metals right now that it's actually quite good. In the news, the UK, we've just recorded the highest monthly inflation. In the US, we've got consumer inflation expectations at 5.2%. And in Germany as well, you've got annual inflation at 3.4%. So with really high inflation, why haven't gold and silver broken out? Now I'm going to try and work it out and paint the picture of what's going on. Now this here is the real message that I'm following. This is real interest rates. And when real interest rates are falling or negative, gold and silver perform very well. Because when real interest rates are falling, precious metals which don't yield anything are relatively more attractive. Now having a look at the real interest rates, we're currently negative, which is great for gold and silver, supposedly. But we're currently hovering around these 2011 lows. Now, if real interest rates were about to head higher, I would expect the price action to be very similar to what we saw here. We saw a spike down, then price quickly recovered and headed higher. But instead, what we're seeing is this slow grind around here, which is pretty much at the 2011 lows. And to me, this looks like a bearish wedge. A continuation pattern that eventually is going to break down. Now, the reason I think real interest rates are going to go lower is because central banks need them to go lower in order to finance their massive debt burdens, or with the government debt burdens. If real interest rates started going higher, it would be a lot more costly for governments to service their debt, and of course we would get a massive sell-off in the stock markets. And as soon as we get a 10% correction in stuff like the S&P, that central banks are going to jump back into the markets. They're going to reduce their taper talks. They're probably going to put more stimulus into the markets, and they can do everything in their powers to prop it up. So I think certainly for the next 5 or so years, real interest rates have to stay low, negative, and possibly even lower. We can just have a look at M2 quickly as well, because that is another important driver of the precious metals. And as you can see, there's no let up. It's continuing to rise, so that should be a tailwind for gold and silver. Now, let's move on to gold. Let's go onto my bars, because I like the bar chart. Let's get rid of this. And if you remember the chart for real interest rates, they were hovering around their 2011 lows. Well, look at gold. Gold is hovering around its 2011 highs. So I think that when real interest rates break down, which is a matter of when, not if, I think the corresponding move in gold will be a break up. And that will take it to all-time highs, and off it goes. And we've actually seen this kind of consolidation pattern in gold before. Now I'll show you on the charts where we've seen this. Let's get off that. Let's move this down. So let's have a look at this period here. Because I think that's quite similar to what's happening today. So the gold uptrend started around 2000. You could argue maybe it started back here, but let's say the gold uptrend started in 2000. 2 years into the gold uptrend, gold broke past its previous highs. It made a higher high, it came back, it consolidated for a period of time, and then it started the next up leg. Now let's compare that to today. So gold uptrend, you could argue it started in 2018. 2 years into the gold uptrend, we break past the previous highs, we pull back and consolidate for a period of time, and I think what's happening now is we're getting ready for that next move up. We're waiting for real yields to break down, and then we're going to see this kind of move in gold. Now, this consolidation has taken forever. This has been over a year, and I've lost quite a bit of money, but don't worry, I haven't sold anything, so it hasn't been crystallized. But really what's been happening is sentiment's completely been turning negative in the gold space. You remember back here when people who had never invested in gold were trying to get into gold, and right now the people who have been invested in gold for ages are starting to leave. And I think that's the perfect environment for us to start our uptrend. Now, one other thing I wanted to have a look at on the gold chart, which I found quite interesting, is look at this resistance line that is currently in play. So if I draw a resistance line up here and try and join these points, maybe if I go on a weekly chart, that would be better. Okay, let's get a new line. If I try and join these points up here, what's very interesting is currently price is hugging this support line. Now I think this is a very strong support line because we've had 1, 2, 3 touch points on it. So there's some strength behind it. And then, back in August, we actually broke down massively, and this is when I shit my pants, and I thought potentially the correction was going to go a lot longer. And thankfully, the price recovered, and it's stayed above this support line. Now what this is a bullish engulfing candle, and that's a very bullish piece of evidence. Now, what potentially could start happening with price is price could, consolidate for a bit, start getting above this level here, which would be, the first bullish sign that we could get. Then if we can get price above 1916, that's going to be incredibly bullish, because what we've got is a lower low, a higher high, a higher low, and then we'll have a higher high. And I think we can have a high degree of confidence that the lows are behind us and the new uptrend is in play once we get above this level here. So at the moment, I think the picture is very constructive. The people that had confidence to stick with their trades at this level have done very well. And at the moment, the market is working with us. And, I think over the coming months, we're going to start to see price go up. The seasonality was against us back in June when I made my first video on the GDXJ. I didn't really realise that at the time, but as we go into the final months of 2021 and and January, they are very bullish months for the precious metals. So hopefully that's going to be a real tailwind driving the sector forward. So my view on gold in the short term is bullish. Now let's have a look at silver and try and see what's going on there. I'll go on the log chart and zoom out onto the monthly. This is the arc which I'm watching. Now, as we can see with this arc, at the moment it's providing supportive pressure with the price going forward. And I think what's interesting with this arc is we can actually divide it into these different segments of price. So we can see for the first several years that silver was contained within this resistance level, this dotted line here, and then eventually it broke out. And then for the next couple of years, it was within this segment of the arc. We got a breakout, retested the resistance, which actually turned into support. And now for the next couple years, we occupied the next segment of the arc. In 2020, we broke out, and now we're in the the fourth segment of the arc. And I think eventually we're going to get into the final segment. In the short term, price is currently pressed up against this resistance level. So what we need to do is we need to break into this segment, and then potentially from there, silver can make its next move, and I think up to all-time highs. You know, I wouldn't rule out in the short term a quick flush down. You know, anything's possible. But really with my investments, I don't look at investments for less than a year horizon, normally for a 3 to 5 to 10 year horizon. But certainly, you know, I think it's starting to look bullish in the short term. I'm probably sounding like a broken record, but, you know, that's the nature of the game. And I think if, you know, potentially if we can get one last breakdown in price to here, that will be, you know, the impetus to start our next move back to all-time highs. Now, if you remember on the gold chart, gold is hovering around its 2011 highs. And I'm bullish on gold on the short, medium and long term. So that means I'm extra bullish on silver. For silver to get to where gold is, that's a 100% move from current prices. Let's have a look at that. Yeah, about 110% move. So it really is looking quite good in silver. I know I've said it a lot of times, but this is where I'm placing my money. I've been losing money the past couple of months, but let's just keep our fingers crossed. So this is the picture of silver. Now let's move on to the GDXJ. GDXJ is the junior gold miners. This is my investment vehicle of choice for the gold miners, and I really use this as my cash savings. So if I ever wanted to, you know, quickly get some cash, or if I needed to pay some bills, I pull it out of the GDXJ because it's quite liquid. I've got low transaction costs, and it trades on UK hours. Now, when I did my first video on this channel, I had a different arc on here. I had a much shallower arc, and it actually came up here. And what happened was price broke down. It kind of invalidated the arc. And when the price goes against you, you can either accept that, you know, your technical analysis is wrong, your drawings are wrong, or you can redraw it. And I think with the evidence that's been presented to me, I think that's called for a redrawing of the arc. Now this new arc, we've got 2 touch points here. So it's, you know, it's not massively reliable, but we can see visually that it is kind of capturing the trajectory of the gold miners as we progress through time. And the central message for the GDXJ is the same. We've had 8 to 9 years of energy building up underneath this 52 level here, and all we're doing is we're buying time until the next move up. Now if we have a look at what the move has been, we had this massive move up after the coronavirus liquidity scare. I don't know if I'm allowed to say that word on YouTube. And then what I think's been happening here is, to me, this looks like a bit of a bull flag. We've got the first bull move up, then we've had a correction in price back to the arc of support, and this, you know, it looks like a bull flag. And when that breaks out, I think we're going to see a repeat of what we saw in May 2020. So if I move this arrow up to here from the bottom of the bull flag, that's the kind of move that I'm expecting. Now, if we have a look, that actually kind of lines up to this next resistance level that I'm watching, the 2012 high. So that's matching up, and then, you know, from there, what we could expect to see is a bit of a pullback, like, you know, probably similar to what we saw there, and then we get the final move up. You know, I've got to be honest, I thought that the GDXJ was going to break out by now. But nothing's certain in the markets. Technical analysis is probably wrong 50% of the time, but all we're doing is we're predicting the weather, and the weather forecasters are never right. So I think it's the people that are patient, that have the conviction to stick with their investments, and that they're not going to get scared out of stuff when the market goes against them. They're the people that are going to do well in the long run. So I'm still very positive about the GDXJ. I have been putting money in recently, and I've got my fingers crossed that we're not far away from the breakout. Now the last chart I'll show you is First Majestic Silver. Now First Majestic Silver is a very important silver miner to watch. I don't think it's the largest silver miner. I think it might be the second largest miner. But the price pattern is very typical of a lot of the silver miners, the majors in the sector. As we can see, we've got this resistance level that's pretty much held price down since 2011. We've had 1, 2, 3, 4 touch points on it, and then finally in 2021 we got a massive explosion up. Now this arc of support is pretty much showing us where the trajectory of the price is going. We're clearly in a bull run, and as time progresses I think we're going to move up the arc of support. Now what's interesting is if I draw a resistance level on this point here, we've got a little bit of a wedge pattern, and price at the moment is retesting this 2011 resistance level. It's touching the arc of support, and on the short term it's compressed against this resistance level here. So really what we've got a confluence of support around here, and it's all to play for in this area of price, and I would not be surprised to see this breaking out and start heading higher. I actually put some money into First Majestic Silver last week actually, and if I manage to get any more money this week or next week, I think I'll put some more in. But really that's all I wanted to cover today. I think the message in the short term is bullish. It is a waiting game, and those who are patient will be rewarded. So that's all I wanted to cover today. Good luck with your investing. Pip pip, ta-da, bye-bye.